Welcome everyone to the second day of the 8th TARC annual conference. I'm Christos Kotsogiannis, the director of the center. We have another busy day ahead of us with incredibly interesting presentations covering a range of themes, from the role of nudging in tax compliance to the role of disruptive technologies in tax administration, to tax audits and their effectiveness, to uncovering tax elasticities. We also have a panel discussion today on COVID-19 in Africa, and a keynote lecture by a very distinguished scholar, Professor James Allen. In case you didn't join us yesterday, I would like to inform you that following the event, the Journal of Tax Administration will be publishing a special issue with papers that are being presented at the conference. The special issue will be subject to the standard review process of the journal. There will be a further announcement tomorrow at the end of the event, and also we're going to be posting information about the special issue on our website, and also emailing that information to the participants. I do urge you, to consider the the possibility of submitting your work, to the special issue.
Okay, thanks a lot, the organizers, for this interesting conference and for having me. I'm going to present a review paper, a quantitative review of the literature that nudges with the aim to increase tax compliance. And this is joint work with Armenak Antinyan, who is a behavioral economist, currently based in Zhongnan University. I believe he's among the participants, so please feel free to use the chat. I think Armenak will try to answer the questions and help me. I'm Zareh Asatryan. I'm based at the ZDW in Mannheim. And so the motivation of this paper is that recently there's lots of excitement around the idea of nudges. Now, this is one figure from the OECD, which shows that there are hundreds of institutions already implemented all across the world, which try to use behavioral insights to improve public policy outcomes. One of the big areas of study is tax compliance. It's very popular among policymakers. Why? Because it's believed that these interventions are very cheap tools and they help to increase revenue. For example, 6 or 7 papers in our sample report back of envelope calculations on what is the effect of one letter in increasing tax revenues, and the average increase they report is more than $200. And this is a sample across the world. So in some countries, this may be a small number, but in other countries, it's a substantial number. And these papers compare that with the very tiny cost of just sending one letter, which can be 50 cents or $1 or something like that. But we also know that nudges can also induce costs. This may be hidden costs. It may be very difficult to calculate costs, but they are costs. There are costs on the side of the tax administration in terms of credibility. They can't just randomize the whole time. They can't do such experiments in a repeated way. And there are also costs on the side of the taxpayer. So hidden compliance costs, mental costs that people have to read these messages, think about them, and etc. And so the main question we ask in this paper is, are nudges really effective? Yeah, we collect all this literature, which is growing very quickly. I will show you the list of papers that we use. I think there were no nudge papers in the 90s. The first ones are in the beginning of 2000s, and then they really kick off in the 2010s. When we had the first draft of this paper, it was November last year, 2019. We had 35 papers in the sample. We did the last revision around September this year. We already had 45 papers, and we already have more than 5 papers on the line that we will add to the sample at the next revision. So some of the questions we want to ask is, are nudges effective in increasing compliance levels? By how much on average? So we want to really quantify what is the average effect of one nudge. And then we want to explore which nudge types work better, which nudge designs work better. Do they work in the longer horizon also on top of working in the short horizon, and whether they are more effective in specific settings or countries. To answer these questions, we use the meta-analysis. Yeah, so we collect the treatment effect estimates from these 45 papers. And I think meta-analysis is not very popular in economics. One reason is that economists only recently started to use RCTs. And meta-analysis is a good tool when you have RCTs, because RCTs have more or less homogeneous quality in their identification. So it makes sense to pool these papers together and study average effects. If you have observational studies, you of course have lots of heterogeneity in the way papers identify, and it's a question whether you want to pool everything together and look at an average effect. On top of that, another reason is that we can really look at the magnitudes of the effect, since we are looking at specific margins. So the two margins we will be looking at is extensive margin, what is the probability of compliance, and compliance at the intensive margin. By how much does tax revenue increase after a nudge? Third advantage of our paper is that most of the papers, or almost all of the papers, use different types of nudges. So they use deterrence nudges, they will use non-deterrence nudges, they use moral nudges. I will come to these distinctions later on. But the point is that since papers use different nudges, we can use paper fixed effects and compare types of nudges within papers. Yeah. Two words on the literature. There are many excellent reviews of the tax compliance nudges, including by authors who are present at this conference. These are very interesting qualitative reviews, and we add to this literature by also doing a systematic quantitative review. There are some meta-analysis of lab experiments that try to improve tax compliance, but no papers on field experiments, on nudges in the field. And then thirdly, there is a recent also ongoing work on doing meta-analysis on nudges, but these are not on tax compliance nudges, but they are on other types of nudges. I'm sorry. So this is our sample of papers. As I said, we have 45 papers. Again, the first one is this paper from the US by Joel Slemrod in 2001. And then there were a few papers in the 2000s, and then really there was a kickoff in the 2010s. This is the distribution of papers across space in the world. So the black ones are the countries which have at least one paper written, and the gray ones are countries which have ongoing experiments, and ongoing experiments we take from this RCT registry of the American Economic Association. This data is a bit outdated, it's from 2019. What you can see here is that experiments have been done a lot in North and as well as South America and in Europe, but they have been generally lacking in Africa, for example. So probably in the next years, we should see some more experiments in Africa. This is the distribution of the treatment effects of our treatment effects. So as I said, we look at two types of responses. We look at extensive margin responses, and we look at intensive margin responses. On the left figure, you can see the distribution of the treatment effects. They are positive on average, and you see most of them are between 0 and 17, 18%. Yeah. This is the probability to comply, and again, this would be the magnitude response, the intensive margin response. In order to increase our sample, so we would have something like 30, 35 papers in this extensive margin sample, and probably half of that in the intensive margin sample. But in order to utilize the whole sample, we also look at the t-values, which will tell us something about the direction of the effect and the statistical significance of the effect, but it will not tell us anything about the size of the response, unfortunately. And this would be the distribution of the t-values, and you see that they are also usually positive. Yeah. Here you see the types of nudges in our sample. So the sort of the baseline nudge that we have, here we call them reminder, simplification, and information nudges. Yeah, this either reminds taxpayers that they have to pay, either they simplify the message that they would usually get, or provide some additional information to the taxpayer. Then the main types of nudges that we are interested in studying are the deterrence nudges. Deterrence nudges would be nudges which tell people about their probabilities to be audited. They would sometimes threaten them with audits and penalties. So in general, we call those types of nudges deterrence ones. And then we have a number of tax morale related nudges. The main categories in the tax morale types of nudges would be these three. Public goods, this inform people about the positive sides of paying taxes, which have to do with the point that the government can finance public goods. Peer effects, this tell people about their neighbors paying more or less tax, and moral appeals appeal to moral aspects of paying the tax, paying your fair share of the tax, etc., etc. So we group those into non-deterrence type nudges, but then we also study those individually as far as our data would allow splitting this sample. And here, a quick summary of the study characteristics. This would be the main characteristics, 8 ones here, but there are more. So the main characteristics that we're interested in is comparing deterrence versus non-deterrence nudges. In our sample, half of nudges are deterrence, half are non-deterrence. Importantly, it's very important to what you compare the effect of a nudge. And it turns out that about perhaps 3/4 of treatment effect estimates have no control group. Yeah? So they compare to a control group of taxpayers who did not receive any letter. And then about 15–20% of the treatment effects compared to taxpayers who received a placebo letter, so-called, the baseline information, and a minority compared to some behavioral letter. We also had some substance in it. And then half of the papers, half of the treatment effect estimates are published, half are working papers. A lot of the nudges are delivered in person. I'm sorry, they are delivered through physical letters, some are digital letters, and few are delivered through in-person visits. Regarding taxes, we have income taxes, corporate taxes, property, VAT, and other taxes. A lot of the papers look at short-run responses. Short-run, I think we define it up to 1 year. So you send a message now and you study the response within a year from now. And some of them, very few of them, study longer ones. Some of the papers look at late payers, others look at all types of taxpayers, and this is the distribution. So some look at low-income countries, some middle, and some high-income countries. I have to run a little bit due to time, so let me quickly show you our empirical design. First, I will show you our baseline specification, where we study what is the effect of a nudge compared to a baseline nudge. A baseline nudge who received baseline information. Yeah, so we really want to not look at reminders, but we want to look at nudges which compare the effect of a nudge to a placebo group of taxpayers who received the placebo letter. Here we also control for the publication status of the paper, since from the beginning we already know from the previous literature that there may be publication bias. And we do this for 3 types of dependent variables. This would be extensive margin response, intensive margin response, and the statistics. In the next model, we add study fixed effects. So we drop this characteristics of papers, but we control for fixed effects for every study. Yeah, and we compare nudges within papers. And then in order to study the study characteristics, we relax these fixed effects because a lot of this study characteristics, for example, the type of the tax, they do not vary within papers usually. In terms of estimation, I will show you just OLS results. But then in the appendix of the paper, we replicate everything using weighted least squares estimations, whereas weights, we use the inverse squared standard errors or the share of study number of observations per study in the total number of observations. And we also use random effect, and these estimations are fairly robust. So here comes the baseline effect. This shows the effect of a nudge compared to, no, this shows the baseline effect of a nudge. A baseline effect is a non-deterrence nudge. It is a nudge where the effect is compared to a control group of taxpayers who receive baseline information. Yeah, and the baseline effect is one where the paper is not published. It's a working paper. And so after defining this baseline effect, we see that we find null effects both at the extensive and intensive margin. Yeah, they're zero, the effects. And also looking at the t-values, we do not see that the effects are statistically significant. Yes. Next one, here we use the study fixed effects and compare deterrence versus non-deterrence nudges within papers. And we here see that deterrence nudges are more effective than this baseline non-deterrence nudge, which was not effective, as I showed before. At the extensive margin, deterrence nudge increases compliance by 2.5 percentage points compared to a non-deterrence nudge. At the intensive margin, it increases by about 13%. Next, we look a little bit more into details of the nudges. So we had deterrence nudges, but here we also distinguish deterrence interacted. Interacted would be a message which includes both a deterrence element as well as a tax morale element. And then here the non-deterrence nudges are split into public goods, peer effect, moral appeals. We do not find any effects of this tax morale nudges. And while the deterrence nudges, the effect of the deterrence nudges seems to also sustain in this specification. One quick comment on the size of this deterrence nudge. So it's a bit difficult to say whether 2.2% increase is a lot or not. We have to interpret it because it depends on the baseline levels of compliance. Yeah, if you have 90% of taxpayers complying, 1 or 2% increase over the 90% baseline is not a lot. If you have a 10-20% baseline tax compliance levels, which would be at the lower end of the distribution, this would be a very low-income country with very low capacity environments, then this would be a substantial increase. But on average, I think given our country sample, these are pretty small effects. I cannot give a precise number, but probably the baseline compliance levels are in the 80-90% range. Here we also then look a little bit into the study characteristics. Very briefly, some of the interesting things is that we find that nudges delivered through in-person visits are more effective rather than physical letters or digital letters. We do not find big effects across tax types. We see that late payers are more sensitive than on-time payers, and we see that low-income countries, the nudges seem to work worse in low-income countries, and they work better in higher-income countries. This is the final part where we also try to study the publication bias. A standard thing that the literature does is to plot funnel plots. So this is the relation between the coefficient size, magnitude. This would be for the extensive margin, and on the y-axis you would have the precision of the estimate. Yeah? So the lower values of y show imprecise estimates, and higher values show precise estimates. And the expectation here is that for the low precision estimates, you would see the effect distributed more or less equally across on the both sides of the average. And this is not what we see. We see that the imprecise estimates, both at the extensive margin and the intensive margin, tend to be a bit right skewed, tend to be skewed towards the range where the expectation is for positive effects. What is important for our case is that the blue dots are for deterrence ones, and the red ones are for non-deterrence ones. We plot them separately because if there was a differential effect, the differential publication bias evidence, then this would question our results that deterrence effects are more effective than non-deterrence effects, but that does not seem to be the case. 2 minutes, 3 minutes, thank you. Yeah, that does not seem to be the case here, at least visually. Here we also look at the distribution of t-values, following the paper that showed bunching at this important critical values, where we get 1 star, 2 stars, and 3 stars. And we also show some bunching at this critical values of 1.645 and 1.96. You can see some bunching, but also you can see that our data is not as great to study such bunching. Let me then conclude. So nudges have become very popular in the recent years. One example here is an experiment with Brazilian mayors by Lotta et al. What they do is randomly tell Brazilian mayors about how effective reminders are in terms of increasing tax compliance, and then they study whether these important mayors are more likely to adopt this policy. And interestingly, they find strong effects. Yeah? So the mayors adopt this policy. But in this paper, we show that they are not as effective as they are often thought by, at least in the policy circles. One clear finding is that the trends ones work better, but also we show that the effects are small. They are at 1 to 2 percentage points at the extensive margin, and they are bound to the short run, which is important. And also they're inflated by they're likely to be inflated by the presence of publication selection bias. So then the question is whether we should not nudge anymore. And the answer is no, because the paper also shows that study characteristics matter a lot. Whether you are working with late payers, the type of the tax, and the delivery method, these things matter. So there is space to improve these nudges by looking at where the previous experiments failed and where they performed better. And also we are looking at very specific types of nudges. So these are letters informing taxpayers, but they are you can think of nudges in a more general sense. For example, there are policies which shame or recognize good or bad taxpayers. There are also these papers or policies that pre-file tax returns. So in a general sense, you can also think about this as some kind of nudges that try to divert the actions of the taxpayers without changing their monetary incentives. And then finally, we found some evidence that the environment matters, that low-income countries, that nudges were working worse in low-income countries, but we cannot study this very credibly because our experiments are tied to countries. And so perhaps one direction for future work is to try to do a nudging experiment that goes across countries, across environments, and this would allow for testing whether trust in the public matters or whether the corruption in the tax administration matters. Yeah, because if you tell taxpayers that you are going to audit them, this may not be credible if the tax authority is corrupt in the first place. And that's all from my side. Thank you very much.
Thank you, Zareh. There were quite a few questions in the chat box, and I think Arminak has answered many of these questions. If you do you want to add anything to Arminak's answers? So the questions were about what is the deterrence nudge and what information goes into the letter, and why there was a difference between digital and physical letters. And also there was a question about the sample of unpublished papers. So if you could just quickly have a look at the questions in the chat box. So from me personally, I understand from Arminak's answer that in the deterrence letter, there is information about the fines and audits. Mm-hmm. So do the tax authorities put information about the likelihood of the audit? or is it just a warning that you can be audited?
Yeah, by the way, thanks for all these answers. I think it will be hard for me to right now go through all of them, but thanks a lot. Regarding your question, Igor, thanks for it. I think, yeah, many tax authorities put the number, the probability to be audited. There's also one or two papers which vary the number of this number. Yeah, they cluster the taxpayers such that to some clusters they can say your probability to be audited is 10%, and to others say 20, 30, 40%, and then they also compare this effect. Interestingly, this paper does not find an effect that higher audit probability increases audits, but yes.
So my understanding is that the tax authorities are obliged legally to only put the correct information. So if they say that the probability is 40%, it has to be 40%. They cannot lie on the letters.
Correct.
I see. Okay.
If I can step in just 1 second, in some papers also there is like a thread simply saying if you don't pay your taxes, you might be simply audited. So like the information is really mixed. In some cases they say the audit probability, perhaps in some cases they simply send a general threat without saying any number. So it really differs, can differ from paper to paper sometimes. Thank you.
Right. Okay. Thank you. Any more questions in the chat box? Let me see. Oh, okay, there is a question from Matthias. What do you compare the in-person visits to? Do the studies use visits where the visit is the only message? This might deter no compliance itself. And the second question is, can you say anything about the sustainability of the effect of nudges? Did some studies employ a series of nudges, and can the same taxpayer be nudged twice?
Both are excellent questions. The first one, what I told you, that the in-person visits are more effective. This is a cross-paper comparison. I think there is the work though. It was some East European countries where they experimented by sending letters and per post and by delivering it in person, and they also found that the in-person visits were more effective. I think Slovenia or Slovakia. Regarding the sustainability of the effect, this is also a very important question. I do not believe there is any paper that does this, but maybe Armenak can. But maybe you can tune into Armenak's presentation tomorrow and see some work on this question.
Thank you. And there was also a question from Hans. What counts as an audit?
What counts as an audit? Well, we do not have any audits in our case. We just have threats of audits, and we understand them as tax audits, which are either desk audits, but also real audits in terms of visiting physically the taxpayer and checking their books and etc.
And if I may, maybe one more question. I've seen a paper on the field experiment. It was in one of the South American countries. And this is related to the moral nudges. So you said that it doesn't seem to have effect. So what they did in this field experiment, they put different messages. One was more, you could call them moral, but some were referring to neighbors, so it's more like a peer effect, and some were referring to the country, so it was more like a patriotism effect or something like that. And what they found is that the references to neighbors were more effective, and the references to the country were not effective at all. So in your classification, then they wouldn't go all under the moral.
Yeah, in one slide we look into the details of the tax morale. We had one message where we had these peer effects. They were not effective. Where we had one category with public goods. So your reference to the country, it can be either public good message in the sense that defense is important, public goods at the country level are important, but it also can be a tax morale in the sense of saying that it's fair to pay taxes, you should pay taxes for the country, etc. I don't know how exactly we code that specific paper, but in none of these three categories we find effects.
Okay, thank you very much. So, okay, so there is a comment from Hans. So references to the neighbors and appeal to social norms, as it's called in psychology.
Yeah, Arminik answered already.
Yes. Okay, great. Thank you very much. It was an extremely interesting talk.
Thanks so much.
Thank you. So we can now move on to our next presentation, and this will be by Lotta Björklund Larsen on Taxtech imaginaries, outsourcing tax audits by introducing digitized information chains at the Swedish Tax Agency.
Yes, thank you, Nigar. Let me see if I can share now better than I did before. Let's see now. Can you all see this?
Yes, excellent.
Okay, very good. I've sort of changed the title somewhat because this is work in progress, but also work in progress of a project in progress. So things are changing as I analyze and think about this. So I'm talking, a tentative title would be Chaperoning Taxtech Audit Controls at the Swedish Tax Agency. And I think it refers quite well to Hans Gribnau's question to the previous paper, what counts as an audit? And this is what I've been thinking about. So, policymakers around the world foresee that new digital technologies such as AI, blockchain, robotics, big data, automated transfers of accounting ledgers, etc., can increase tax compliance. The introduction of proceedings from a recent conference on digital technology states, and I read, and you can see this, tax agencies can collect all data seamlessly, capture live payer tax events, offer proactively new services accordingly, leverage advanced analytics to target socioeconomic issues, cooperate with other governments or private sector for better efficiency, better react to change, handling operations in a more optimized way, also enabling a better experience for their employees. They're also shifting the balance between control and self-compliance, making compliance much easier to achieve by better taxpayer experience, end quote. So the digitalization of accounting and taxation practices, a set of tools in the following I refer to as tax tech, make possible completely new ways, ensuring that the right tax is reported and paid. Tax tech promises a bright new future of increased compliance. However, in this paper, my focus is not on describing the tax tech tools per se, but rather on how they can be used in tax audit controls, and in particular, what the implications for tax compliance might be. And I'm struggling to understand what this means. So digitalized audit, controlling or overseeing is used by tax administrations all around our globe in manifold ways and is under development. The implications for tax compliance have hardly been addressed, probably because this is all happening as we speak. My theoretical outsets are two. On the one hand, in tax compliance research, and in particular on how audits are seen to have an impact. On the other hand, on insights from STS, Science, Technology and Society Studies. Its premise is that how technology is used will always have an impact on societal issues, such as compliance. And here I use it in a broader meaning for the willingness to pay tax. So introducing new technology like tax tech thus have the potential to change people's behavior and views on compliance. As a case, I use the development of tax audit and controls conducted at the Swedish Tax Administration, STA, while it increasingly makes use of tax tech. The STA is one of the most revered and trusted governmental public authorities in contemporary Sweden, argued to be the result of very deliberately working with compliance strategies over many years. The STA nourishes its standing and are thus very cautious to adopt new practices that might rock the boat. By no means should tax compliance be diminished. I find STA an apt case for my questions. Its audit controls have been increasingly digitalized and responsibilities are moved from the STA to other actors at the tax arena. In a holistic approach, I ask, what are the implications for tax compliance when applying Taxtech? There is also pressure on the STA to control more taxpayers. In a report by the Swedish National Audit Office, and this is a very heavy instance in the Swedish governmental arena, it was suggested that the STA's dealing with possible tax offender was inefficient. The NAO showed that a large number of digital-made decisions tend towards nothing further being done. And as such, it suggested that both the sampling and the following handling of audit controls should be made more efficient. This criticism was to some extent reiterated in a recent audit from last month. So nothing much seems to have happened during 8 years, but technically it has. And the NAO critique is always taken very seriously. It pinpoints concerns within the STA about the very work-intensive and expensive audits which actual impact also has been questioned. As one manager said, and I quote, "We have no idea about the consequences of our audits," end quote. And that is, they might know how selected taxpayers subject for specific type of audits behave, but not how taxpayers at large react to audits being conducted. So while the critique from NAO is taken at heart, it has to jive together with other concerns. Finding out the consequences and implications of doing audits more efficiently, incorporating Taxtech, and on the same time retaining the trustworthy position it has in Swedish society. The material for this paper builds on long and extensive ethnographic fieldwork at the STA, which I've written about elsewhere. The fieldwork material comes to new light in this paper, added with numerous conversations during the years, complementary interviews conducted in 2017 and in 2020, and many informal discussions regarding their current change of control work. Policy documents as well as internal work in progress have been made available to me. Both in academia and in tax administrations and in collaborating between the two, there have been much and extensive research on taxpayer changing behavior due to an audit, as we also saw in the last presentation with this impressive overview of many studies being done. Particular attention has thus been paid to how audits are conducted and the impact on compliance in the following tax periods. For example, if taxpayers are subject to correspondence or face-to-face audits, how encompassing an audit is, i.e. a desk or a visit audit, or changing the tone or wordings in different communication from tax administrations to taxpayers. Yet, how taxpayers react if audits are changed altogether, and this is what I think about here. However, before continuing, there are many ingredients to increase compliance. The views on how to do so has varied over the years, and we can refer to them as the 4 C's and a trailing, not always recognized S. Coercive strategies where taxpayers have been forced to pay was for most of taxation history rulers' main tool. Under the threat of weapon or legal prosecution, non-obedient taxpayers were fined or jailed and subsequently subject to public condemnation. Controlling and auditing taxpayers, ensuring that the right tax has been reported and paid, is currently seen as one of the most important tools of any tax administration. As not all taxpayers are righteous and moral entities that always aim to pay the right tax, there has to be an underlying threat of an audit control. These tools can be part of coercive strategies, but can also in more refined ways ensure that taxpayers at large trust the work of the tax collector. The argument goes that by showing that all taxpayers are made to report and pay the tax they owe, other taxpayers are more prone to pay their share. Communication strategies were the result of tax administration's insight that tax is for most taxpayers a horribly complicated task. Instructions in everyday language, step-by-step instructions, and leaflets in most spoken languages of a country is seen to increase the possibility, but also willingness to pay tax. Communication also includes informing taxpayers about what taxes are used for, carrying thus a very moral message. We all have to contribute. Finally, collaborating with taxpayers in the name of making taxpayers' reporting procedures more efficient is a fairly recent idea. One such example is the OECD promoted so-called cooperative compliance initiatives, where tax administrations collaborate with multinational enterprises. Simplicity is a somewhat overlooked strategy in the literature, that tax administrations could increase the willingness to pay tax and also compliance level by making the tax return process for taxpayers as simple as possible. Digitalizing tax returns can, if introduced carefully in an environment where all can assess the technology, be one such smoothing strategy. The Swedish employed taxpayers are seen to be more compliant than the American ones, for example, perhaps partly explained by that the Swedes spend very little time doing their yearly tax returns, whereas the latter have on average used 27 hours. And this was perhaps 10 years ago, but I don't have a more recent figure. Most tax compliance literature, though, advocate combinations of the above. The STA, the Swedish one, has over the years tried many of these compliance increasing strategies and tools. With the Ingmar Bergman affair in 1974, it realized that harsh control and coercion strategies were counterproductive. Nudging strategies has over the last decade been encouraged by the STA, such as simplifying the yearly tax return, being serviceable, communicating information in many languages, and treating all citizens equally and equitably. This includes aiming not to accuse anyone of cheating and a careful wording when referring to taxpayers, even the non-compliant ones, or not singling out categories of taxpayers. And STA's current motto is, "Together we make society possible." Collaborating thus seems to be in focus for compliance currently. Tax authorities' approach to auditing and controlling has been subject for change over time and overlap with the various strategies authorities have taken to increase compliance. Manual tax audits, checking annual statements with actual bookkeeping, paying visits to taxpayers, verifying business activities are time-consuming, expensive, and prone to human errors. The movement of tax administrations intervening and controlling from after tax returns have been handed in to take place closer to the actual transactions is not new, but has been going on for a long time. It makes for interventions prior to that the tax return is being submitted. A Swedish tax audit control is heavily regulated by law. It says that it has three purposes of an audit. First, to verify that tax filing and other required information is complete and performed according to the rules and regulations for a specific year. Second, to ensure that the same information can be provided for ensuing years. And third, to acquire, if necessary, information from a third party. STA conducts two standard types of control: the desk control conducted at the STA office, and the more intrusive and encompassing audit control, where visits to the taxpayer's office are conducted. For example, in 2012, at an audit control I followed of self-employed entrepreneurs, 10 days were allocated for each taxpayer, of which 2/3 of the time involved administrative tasks and 1/3 concerned the actual auditing. The manager of the department signed off at 4 different times for each auditee. It is thus very time-consuming, labor-intensive, conducted post-filing, and the implications they are unsure of. Contemporary tax tech makes possible to control in different ways. I will mention 2 concerns the STA have contemplated on changing audits during the last 8-10 years and deliberate on what each of these changes might mean for compliance. First of all, the new tax tech means that the STA moves from what they call an issue-based control to information-based. Issue-based means taking action based on a specific event and raises concerns at the STA. It could be like an audit I followed back in 2012, where the aim of the audit was to ensure that costs accounted for were business-related and not an attempt to deduct private consumption. One case regarded a professional photographer and his taxi expenses. The auditor posed numerous questions, such as if a posting in the bookkeeping of a taxi drive actually took place, was it taken during business hours, did the transport originate from his office, why was the alternative of taking public transport public transport not chosen? Was there a receipt proving the ride? Issues like that. Auditors said they strive to be reasonable, taking a more holistic approach. Although this particular audit had the specific aim of finding non-business costs, there was still a consideration for the business of the photographer. And he explained that many taxi rides taken at night was that he did installation at commercial events taking place in the evenings, explanations that the STA accepted. So the outcome was that the STA only charged for half of the undocumented taxi rides. And this nitty-gritty detail, I mention it just to show how they still have gone from issues-oriented to thinking more encompassing of a business reality. Some years ago, the STA imagined a future of auditing digitalized information changed among its corporate taxpayers. The idea was that any economic transaction would be entered only once into an externally certified business system. Such systems would provide financial reporting as well as automatically prepare annual tax statements and transfer them without human intervention to the STA. The STA would only provide APIs with the relevant legal information, the various tax rates, dates, etc. The actual audit would thus be transferred from the resulting accounts at the end of the accounting year to verifying the input, making sure that all transactions subject for tax are entered into a certified system. Proponents thought it would be a very efficient system. Instead of controlling thousands of individual corporations, the control would be on digital accounting systems. Such a control system is neither oriented towards transactions nor on issues. Focus is instead on creating secure information change within certified systems. Responsibilities would thus be spread, and in practice would governmental audits be outsourced to certification organizations who had to make sure that also software providers complied. This thinking has been abandoned though. The idea of external certification of accounting systems is gone, and the STA understood that it was simply too difficult to certify software as it is constantly subject to adaptation, bug fixes, and development. The contemporary ambition is not more modest, but all-encompassing and still in the making. So back to this information-based is kept as an idea. It means taking a more encompassing approach, yet the STA has been a bit hazy in their answers of its exact definition. The emphasis is that all information from a taxable entity is present and accurate. On the one hand, it means that the STA works to ensure that the information given by taxpayers are sound, safe, and correct according to rules and regulations, a more classical audit. On the other hand, it also means that they are spreading its net, engaging more explicitly with other actors on the tax arena. And the STA, as you can see, illustrates the information-based auditing in brochures. On the right, you see a sort of female male figure, a tax inspector, standing in front of a globe with 3 servers prominently placed to the figure's left side. The servers are so big that the tax inspector figure shrinks at their side. And the feeling is truly that Taxtech is taking over and that the inspector will play a smaller role. This illustration is widely used in presentations where STA explains this more holistic view, recognizing that it has large implications on the way a tax administration works. 3 points are emphasized here. So what they talk now about is that they have quality assessment of information, what I write as tax data. So the concept of audit control has been replaced with this notion of quality assessment. It is made in meta form and made on information gathered from numerous sources: taxpayers' business and accounting systems, payment providers, other governmental bureaucracies, internal organizations, as well as other sources. The chosen information will be assessed together with data from STA's different handling systems, both in the automated decision-making systems and in the system for conducting manual audits. Assessment regards who is providing the information, what does the information regard, and which type of taxpayer is in focus. But this also requires other Taxtech security dimensions around the given information. In addition to the sources mentioned above, software providers, digital infrastructures, all the bits and pieces that make sure the information is transferred from one place to another has also to be quality assessed. So the STA currently investigates if there are any legal constraints to conducting controls in this way. It certainly is a change from the contemporary situation where emphasis is on source of information being correct rather than if the system is treating the information correctly. STA recognizes that the information that we'll have at hand is somewhat fragmented. The emphasis on source means that they ensure that the information entered into the system reflects the actual transactions made. Finally, it also means a change for tax administration capabilities. Leadership has to change, and so will ways of working, as all tax administrations have to apply a different approach to their task using other sets of knowledge. Audit-wise, it means an increased focus on secure systems and quality in the information given, but also on the selection process of taxpayers subject for audit. In the debate about Taxtech, it is easy to be blinded by the rosy arguments about efficiency and optimization, increased tax compliance in the name of simplified tax returns, and better taxpayer experience. The possibilities that Taxtech makes possible in forming new audits makes for an enormous change. It's not only how taxpayers are controlled, but who is actually doing the control, what is subject for control, and when in time it is done. The implications are various, and I will end this presentation with more questions than answers, but also proposing a new way of thinking about tax compliance. How will the relations between actors on the tax arena be changed? Will the tax administrations take on the role of a big brother or someone else? So the new Taxtech tools will change audit controls as we know them radically. Perhaps we can see what I propose calling chaperoning in lack of a better word. Audit controls as we know them seems to be a thing of the past. So first, the timing of when audits are done are changing. From controls solidly conducted after tax returns have been handed in, and there are now possibilities of conducting them when transactions are happening, IRL, so to speak. Creating structures that preempt errors in the first place becomes even more adamant than conducting actual controls. And I know my time has ended, but I just want to finish here, so bear with me, please. Second, it is difficult to understand what exactly is now subject for control. It is a more holistic approach when focus is moved from issues to information. Controlling at different levels makes it possible to control different issues at tax return or taxpayer or network levels. It is apt to ask if quality assured information a larger intrusion into taxpayer reality, or if at least chaperone that makes sure that taxpayer behavior is proper and according to tax rules and regulations. Third, from audit controls being heavily regulated by law and conducted by the STA, we can ask who is conducting the audits. Software developers, tax administrations, algorithms loaded with values, tax advisors. Fourth, such audit transfers and even outsource responsibility from tax administrations to many other stakeholders, and especially to software developers. What is not always recognized is that accounting software developers increasingly acquire central position on the tax arena, a position that neither them nor policymakers are comfortable with. And fifth is a systemic inspection, a worse intrusion into taxpayers' life than contemporary traditional audits or real-time reporting. Depending on how the new controls are conducted, this might open up a Pandora's box of legal issues and decrease trust. In the end, will such controls increase our willingness to pay tax? Thank you.
Thank you, Lotta. It was very interesting. So are there any questions from the audience? I have a question about the use of the digital technology. So it's probably not surprising that the authority abandoned the idea of putting all the economic transactions in one system and just putting it in a black box and then generating the tax return for everyone. But probably for some sectors of the economy, it would be more feasible than for others. So why wouldn't the tax authorities just make one step at a time and go sector by sector and do it this way, and probably focus more on corporate transaction rather than individual personal income returns, because that would be well, the corporate tax would be regarded as less intrusive into private lives, which I think is the major objective. And the second, my second question is about the use of digital technologies for information and reminders. So that's, of course, this is one obvious application, but as we have seen recently in this country, it led to quite a negative thing, because many people received automatic reminders about paying or not having paid taxes in time during this crisis situation where people actually didn't earn anything, and they received the letters anyway. And some of them were based on this nudge idea, as we heard in the previous presentation, where people were told that we need your tax to pay for NHS. And many people took it very negatively. So what are your views on the possible use of these digital technologies in different sectors of the economy, and also how much of these digital automated messages must be still controlled by human beings who sort of monitor the ongoing situation? Thank you.
Thank you, Nigar. Many questions. I try to address them. First of all, this is all about corporate taxes, all right? But under corporate taxes, of course, also self-employed, as we heard Judith speak about yesterday, comes in, because they need to deliver their taxes this way. Having said that, I think they realized that also what I tried to say in my presentation was that there were too many. First of all, they would basically transfer the control of audits to software providers, and also some sort of certification who was going to certify that these systems were always compliant, right? I mean, the idea was fantastic in theory, but thinking about, we know how many updates we always get to the software we have in our individual computers, right? And with the bug fixes, with the development of new things coming in, it's just not secure to audit in that way. And then again, I'm also thinking about, is this an audit? Can we call it an audit? How do we think about this? Is this a different way of controlling, just as it is with platform economy, as Judith addressed yesterday? This is new things coming up, which Taxtech make possible. But having said that, it's using Taxtech and thinking through it properly. I think then it can play a very good role in increasing compliance. Obviously, the example you provided there of people who, didn't earn enough, and still they got a letter was wrongly directed, right? Whereas if you apply it and thinking about the human response to it, I think it can be effective. For your last question, if I understood it correctly, is that something they really struggle with thinking about at the tax administration, or they struggle with thinking of how to address it, is how to educate tax auditors. If increasingly Taxtech will take over, perhaps even AI in the long run, how will the people who are going to look into the more complicated cases be educated? How will they gain experience? That's an important question, but this is by no means the work they do at the Swedish Tax Administration is by no means finished. So I'm continuing following this project and trying to think with it as they also advance their thinking about it.
Thank you, Lotta. And we have time for one last question. So there is a question from Hans Grib now. Would there be a difference in the effect on voluntary compliance and trust between young people and older people? And I think it's again in relation to the new technologies.
I think it's not necessarily young and old people, but rather computer literacy or tax tech literacy, if you like. In Sweden, we still have the opportunity of providing our annual tax returns on paper, just because they want to make sure that also elderly people or people who do not feel they have access and can acknowledge this. And I have a PhD student who is studying tax tech in Kenya, and there you don't have the opportunity to enter or to deliver your tax return on paper, which is quite interesting because it poses problems if everything is digitalized. But of course, it can be a potential threat, but I don't think it will be. Not in the Swedish case, in any case, yeah.
Okay, thank you very much for a very interesting presentation. So we will now move on to our next speaker. And our next talk is on disruptive technology in tax administration and socio-technical perspective. So again, related to the new technologies in tax compliance. And our presenters are Emer Mulligan from Galway, and I think it's a jointly with Grace Walsh. Emer, the floor is yours, and Grace. Again, we have 20 minutes for your talk and about 10 minutes for questions and answers. Thank you.
Grace, my dear, thank you very much. And thank you to TARC for giving us this, Grace and I, this opportunity to present what is also indeed a work in progress and hopefully somewhat suitable follow-on conversation, I think, from what Lotta has been speaking about. So as the title suggests, we're looking also at these technologies, particularly what's categorized now as disruptive technologies and how they're being used in tax administrations, but we're taking a socio-technical perspective. And my work here is ongoing with my great colleagues from Maynooth University, Bayego Ojo in particular. And also we have two postdocs working with us, Sanas and Grace is joining me on the presentation here. So in terms of, Grace, the overall structure there of our presentation, I'll address briefly the background and research lens, if you like, the way in which we've come at this project rather differently indeed to Lotta's. We are very much embedded in, if you like, the need of investigating and examining the potential link between SDGs and these technologies. And some examination around that brought us to research aims and indeed our methods, which I'll briefly outline to you. I will then hand over to my colleague Grace, who will bring you through some of the key literature that we've been examining to help us indeed understand what's happening and perhaps develop some adoption models that might be useful. She will also point out our research question arising from that review. We are in progress, so we're not finished yet. We have some preliminary results, which we'll present to you here today, and then I'll come back in at the end with some discussion points. Okay, so in terms of the background, it is a multidisciplinary team with expertise across taxation, data governance, information systems, social science, and organizational science. I guess while a couple of us are broadly from the social science side, Grace very much coming to the table with our organizational science background, Bayego, data governance, as is Sanas, and indeed both of them also with an information systems knowledge, and then myself on the tax side. So I suppose this is very exciting, having a multidisciplinary team, and it's also challenging because obviously I'm not as familiar with some of the technologies and how they work. And obviously then some of the people on the technology side and indeed the organizational side are new to taxation. But in many ways, I think this reflects what's also going on within the tax administrations themselves. We're increasingly building very significant IT units within the tax administrations, and often these people are coming to the table in the first instance without tax knowledge. So we have this kind of interdisciplinarity, I think, suitably reflecting what's also happening within the tax administrations themselves. We're looking, for the purpose of this particular study, we're looking at 3 tax administrations, and obviously we're concerned with drivers, mechanisms, and challenges to the adoption of these technologies within the organization itself. As I mentioned earlier, the UN Sustainable Development Goals are pretty central in terms of an ultimate objective of what we're trying to do. And indeed, the funding, which I sort of should have acknowledged from the outset for our project, comes from the Irish Research Council. And they were very concerned with the whole idea of the extent to which sustainable development goals are being helped, if you like, in terms of the delivery thereof through public administration more generally. Obviously ours is we're focusing on tax administrations, and again, in terms of introductory term, our statement is that we're very much focusing on technologies more broadly outside of tax administration once we get to find out what's happening within them. In other words, the transferability of our learnings to other areas of public administration is also very important to us. So targets 17.1 and 16.6 are very important in this context for SDGs, where they're identifying the importance of identifying tax administrations as targets for improvement to support sustainable development. So we're very much trying to get to the root of the way in which these technologies are improving what it is that we are doing. They are indeed recognized as vehicles to support sustainable development goals, and there's a literature emerging in that space. There are numerous examples, as you can imagine. We've just put in a few here, particularly around artificial intelligence and how it has been used to promote certain good, if you like, across various jurisdictions. And that includes tax administrations, and we've identified specifically Finland here. Blockchain, another one of these disruptive technologies, according to Glavantis, can reduce administrative costs and increase trust in public spending. And that's an interesting idea, the whole idea that these technologies can increase in trust in the actual expenditure side itself. There might be another block of literature that would say it would lead to more distrust in this. Efficiency gains from digital technologies, there's no doubt they have the potential to reduce some inequalities, but it's by no means a panacea. And as these authors say here, such gains have not been equally distributed in the past. And indeed, I suppose it's unrealistic to expect that they will in the future. But I think the important thing here, and which we're trying to understand in our conversations with the tax administrations, is that hopefully we're not creating a new set of inequalities. Yes, we might be fixing current ones, but not creating hopefully new ones. And we're trying to understand the extent to which these tax administrations are taking this into account. Okay. Research aims, cognizant of what I've said already, amounts to us looking at, we're trying to develop a model of successful digital technology adoption in public institutions based on our experience in one such institution, that is tax administrations, and translate these hopefully into guidelines for other decision makers. So I guess there's a real applied dimension ultimately to what we're doing also, in addition to raising real, I suppose, significant issues, just like in the previous presentation, around what's changing about tax administrations through these technologies, and what's changing in terms of the relationships, if you like, with taxpayers, both corporate and individuals. And we finally, again, very much on the technical update side, not particularly my area, but technical updates to processes and standards, which are where the deployment of technologies in public administrations are concerned. So again, very applied on the technology side. Okay. Let's move on there. So in terms of research methods, we kicked off with conducting a systematic literature review, which Grace is going to give you the outputs, if you like, from that in a few moments. And we have, following on from that, developed interview protocols. And in addition to looking at, I guess, the literature that Grace will refer to, we also, some of us on the team, had some earlier experience in the context of another funding application of the kinds of issues we needed to dig deeper on when speaking with the relevant personnel. It's a qualitative study where we're talking to people within tax administrations, and needless to say, we're talking to both the technologists within that, so at the very senior level, the chief information officers we've spoken with, tax operations personnel, IT professionals, and tax administrations. And I would say one observation, when the team, as if you like, are carrying out these interviews, we do them together, and it's one of the challenges of a multidisciplinary team is we all kind of want to push down different directions in the interview, but we still only have an hour to an hour and 15 to do it. So we've had to become very clear on what's our focus within those interviews. Anyway, that's just a methodology point. We've obviously done our recordings and transcriptions and coding is now in progress, but we're not finished data collection. We have another site to visit at the moment. Okay, so with that, I will hand over to my colleague Grace, who's going to bring us through some of the literature review and preliminary findings, and then I will pop back in on the last slide with some discussion points and next steps. Okay, Grace?
Thank you, Emer. Yeah, so I just want to bring you through some of the insights that have emerged from our systematic literature review that hopefully might be relevant to some of your own research. So the public sector administrations, they're very rich in reliable data sets, and finding new ways to utilize and leverage this data to enable tax administrations to gain efficiencies is always going to be of interest. Big data analytics in government systems can enable better risk management through audit prioritization. And such a system can lead to greater accountability of government activities because there's a clear predefined selection criteria in place. However, if data is being used for audit prioritization, data governance is fundamental to ensure that public trust remains. Good data governance is also important to reduce potential silos that can occur or increase consistency. Now, with disruptive digital technologies, if an administration can gain competencies in them, it really enables smaller, maybe less significant countries or governments to gain soft power in an international stage. So they can participate in international efforts to set regulations in a particular technological niche. So we've seen this with Gibraltar. Gibraltar were the first jurisdiction globally to regulate blockchain technology. And because of this, other nations have followed suit, and they've actually taken up Gibraltar's regulations verbatim for their own larger jurisdictions and nations and governments. So that's a nice sort of example of how such a small jurisdiction being a first mover can have a massive impact on the global stage. We also see this with Estonia. So they've been using blockchain for e-residency and to provide virtual residency to non-citizens via an electronic identity card, a smart card. And then moving on to human factors. So tax administrations, they have to serve the whole of society, and they engage with people of all skill sets and all competency levels. So new systems can't simply be rolled out and legacy systems abandoned. There needs to be access for all citizens, and changes to the system has to be measured, has to be considered, and it needs to be implemented in a step-by-step basis over time. The skills that are required to develop and implement these new digital technological systems are specialized, and tax administrations are competing with tech firms who have far greater budgets for these skills. So there's definitely, they're on the back foot in some ways when they're competing against these tech giants for the skill sets that are very much in demand at the moment. So with recent technological leaps, we've seen some tax administrations choose to rely on private firms for system development or data management, and this can leave tax administrations exposed. We also understand that there are cultural differences and a variety of social norms related to the societal acceptance of digitalization. So one of the examples when it comes to data, big data analytics would be China and the USA. So China has very much embraced digital technologies, and they use it to encourage social innovation and improve governance and strengthen rules. But this has also led to a centralization of control. In the US, the respondents are quite favorable to businesses using digital analytics or data analytics rather than techniques being targeted at specific individuals or individual level citizens. Then if we just move on to organizational factors. So e-government, it's not just about automating government using ICT. It is value-orientated government. So a government that pursues ideology and values, and it's technology that's enabling the government to fulfill these values. Developing internal competence in digital technologies is key to avoiding over-reliance on private firms, because there are competing interests there and diverging values between public and private institutions. There are also ethical challenges to public sector technology adoption and changing legacy systems. And just a final point on this, technology can increase government to business interactions, and that can lead to the opportunity for co-creation of public services as a potential area of development going forward. So when we think about the societal impacts, so digital technologies, they have the power to impact public administrations, and specifically in the case of our research, we're looking at how they can impact tax administrations. They're enabling the use of existing very rich, very reliable data sets to improve public services and also shape public policy. Increasing participation in turn has the potential to increase public trust and increase legitimacy of the tax administration. The opportunity to engage with tax administrations via digital technologies can also ensure more equitable access to these public services, because it's reducing the urban-rural divide and ensuring we can also use digital technologies to allow nations and governments to share data across borders, and this increases cross-border cohesion between governments. So this brings us on to our research question and our framework. So the research question that has emerged is, what factors impact the adoption of digital technologies within tax administrations, and in what ways are such technologies impacting the administration? So the research framework considers the tax administration, including its leadership, its culture, its governance, but also the broader context within which it's operating, what's going on in the ethical, the legal, and the regulatory environment. We want to understand if tax administrations take a proactive or reactive stance to digital technologies. And we're asking how potential technologies are identified, how they're sourced, how they're implemented, and ultimately adopted, and also measured as well is important. Finally, what's the outcome? So are there efficiency gains? Is it reducing administrative tasks? Is it empowering citizens? And is there a more rapid fulfillment of the Sustainable Development Targets issued by the United Nations? And all of these questions and finding out the answers to all of these questions can result in understanding if the administration is strengthened or weakened by digital technologies. And I'm sure there's components of both potentially with different levers of digital technology. So the preliminary results. So as Emer mentioned, we have started our data collection. We have transcribed some of the interviews and started coding. And what we're finding is that the public sector can be subject to procurement bureaucracy and resource shortages. So it's a very challenging context in which to try to implement cutting edge innovative technology that can be quite expensive in its early stages. Tax is also becoming increasingly complex. So we see the rise of the gig economy and the changing of employment norms. So AI solutions are still very much in their early stage of development, and there's questions around how they can manage the sophistication when dealing with complex tax matters. Also, there's a broad mix of skills, both in relation to service users and citizens and the employees of tax administration. So that means that not everyone is comfortable with this increasing digitalization that's occurring. Political support is very important, and legislative backing is necessary for tax administrations to legitimize their activities or any changes to their activities. And administrations are following very much a business-led technology rather than technology-led business. So they're not being driven by the new technology that's on board. They're being driven by what the need is within their administration. And tax administrations we've found to be more dynamic and innovative than other public service administrations. This is a nice quote. So this came from one of our interviewees, where they're not chasing money and we shouldn't collect. We want people to pay money that they're due by using technology to ensure that that happens as naturally as possible. I feel that this quote really highlights the use and adoption of digital technologies. They're not implemented in response to any particular identified tax gap, but as a means of supporting tax administration's activities and enabling tax collection to happen naturally. Most IT systems that are in place in tax administrations are coming on board in recent years are implemented. They're not directly impacting citizens because they're internally facing. Also, real-time data has very progressive implications for the tax administration that they've recently understood, because the current global pandemic meant that having real-time tax data allowed them to implement targeted social supports where they were needed most using reliable real-time data. Also, digital technologies are changing tax administration's workforce. So they're reducing menial roles and they're leading to a more professionally enabled workforce with highly skilled people. So they're just some of our initial preliminary findings that are emerging. And I'm just going to hand you back now to Emer, who's going to wrap up the presentation. Thank you.
Great. Thanks, Grace. Yeah, just a couple of quick points, and then we'll open it up because I know there's a couple of comments coming in. That point of making tax collection as naturally as possible, and I know it's not on this slide, but I did want to pick up on it because it has come up in quite a few interviews that we've had. And I think my conclusion is naturalization in this context seems to be cut out the middle, if you like, of the transaction, and that it's basically automation at the root of it. But it's just an interesting, maybe you're all very familiar with naturalization in the context of tax compliance, but it was a fairly new one to myself, and I thought it was an interesting term. So just a couple of quick things. The other point I wanted to make is about hiring of skilled people. And Grace did make the point about that it's very difficult to compete, particularly on the IT side, and indeed on the tax side, but particularly on the technologist side as well, about, you know, people can make more money quite simply outside of a public administration context. In another project I'm involved in very recently, there's been a little bit of a turn on that in the context of COVID, believe it or not, where very senior tax administrators have informed me that actually there's quite a number of applications coming their way at the moment to come back into tax administration. So they've decided that it's a better deal in the event of a pandemic, and maybe another one, God forbid, in the future. So I guess I will just leave it by saying what elements need to be better understood in order to support quantitative studies. I think it would be great to get input from any of you guys, if you have any ideas around, maybe because we've some more data to collect, are there any other aspects of this we should focus on, particularly with a view to perhaps supporting future quantitative work in this space. Also, I would just, the final one is about the first point there, which is how has technology impacted on or changed who tax administrations seeing themselves dealing with? I think this is a really interesting point that's come up from two interviews we've had with two different tax administrations, where one made it quite clear that really they don't see themselves engaging in the future very much at all with citizens directly. They would say, in the case of anybody who's got any kind of complication in their personal income or tax situation, we're more likely to be dealing with the tax accountant. So we're setting up our systems, we're adopting technologies that we feel will interface better with the intermediary than with citizens per se. So I think that's an interesting thing, considering certainly within Europe at the moment, there's such a big thing around citizen engagement vis-a-vis public services. So it's just something that maybe other people in the chat might have a comment on, but that notion that they're actually thinking with these technologies in terms of their liaising with tax accountants more than with individual citizens. Thank you very much.
Thank you, Emer. Thank you, Grace. We have now questions from the audience. The first question is from Christian Agung Prasetyo. What do you think the effect of over-reliance on private firms towards the ability of the tax office to maintain the complex system to serve the tax office's needs?
Okay, I mean, I think the concern from, I'll give the tax concern, and then maybe Grace can give a different kind of perspective. But wearing my tax hat, of course, the concern is who's in charge, you know, and who's getting to shape how we're investigating things, who's getting to shape the kind of data we're collecting, how we're doing it, and do they have the same, if you like, interest that the public administration, the tax administration, is meant to have, okay, in that particular area. So you know, I mean, anytime a public administration in any sphere outsources something, if you like, or at the mercy of, shall we say, they might not fully outsource, but at the mercy of information and assistance on the private firm. I mean, that's the tension of private versus public, and who's running the show of tax administration. That would be my concern.
Yeah, and also I would echo that the whole idea of using e-government and using digital technologies to help promote government ideologies and values in the area of ensuring that citizens are getting the best value possible for their tax expenditure that's being expended. So if you have private firms engaged in that process, you know, there's danger in relation to citizens' data being handed over to a third party and the power that can give to competing interests with divergent values and ideologies.
Thank you. There is another question from Karen Suris-Sloan. Very interesting. Does the general attitude of tax officers towards digital technology matter? I'm wondering whether you find tax officers consider this technology rather as a threat to their relative importance, devaluation of their competence in tax audit process than as a supportive tool. What do you learn about this aspect in your interviews? Did you also interview tax auditors from the field, or rather tech people in tax admin?
Okay, very, very good question. We were kind of expecting, if you like, to hear about all the tensions, you know, between the tax people, as it were, the tax technicians and the technology people. And I have to say, so far that hasn't come out of our interviews. I'm sure Grace would agree. I think what we got from the tax people is, you know, this machine is running, literally. So we've got to get on board with this. This isn't the time. And other countries, you know, they're competing with other countries that are adopting technologies, etc. So every tax authority, actually, it's almost like a legitimacy argument as well in the international context. They want to almost be seen to be running with some of these technologies if others are. But I think there was a genuine, I have to say, appreciation on both sides of the others, right? And the need for team. So one thing we've dug in to quite a bit in the interviews is how are they managing that team? You know, what's the not so much the frequency of meetings, but are they reporting to each other? Are they actually in cross-sectional teams as they're developing and working? And of course, what's happening is a little bit of what I think is happening in our own research team is I'm learning more about technology as we go, and my colleagues are learning more about tax as we go. So I think over time, there will be a better mutual understanding and appreciation of the other person you're working with. And I think that's going to be the future. And I think as educators in tax, our challenge arising from that is how much technology and data analytics in a tax context do we need to teach them as well? Or is that for when they leave the university and that's when they're out on the job? So that's just an immediate reaction. I don't know if Grace wanted to ask and add anything.
Yeah, no, technology is very much seen as a tool that will enable them to better do their job rather than something to fear or be worried about taking over your job. I think there is some wariness about how sophisticated that these new technologies are, that AI has so far to go before it could possibly take over their roles. So right now it's just a tool. It's another facet to their toolbox to enable them to better do their job.
Thank you. And we have 3 more questions, and I think we'll be wrapping up after that. So the first one, it's actually a question and a comment from Christos. Thank you both, very interesting. A question: there is a digital frenzy from the interviews you have conducted. Do the organizations have a clear understanding of the benefits, or they just ride on the wave? And the comment: for the public sector, there are also overlapping responsibilities across organizations, which makes digital adoption difficult, besides the lack of skills you mentioned and the internal resistance to change. So if you could please answer the question about the understanding of the benefits, and then I'll read out two other questions. Thank you.
I think they definitely have an understanding of the potential benefits, but they're very wary of the risks and the downsides. And the tax administration, and this is very central to the SDG positioning of our project, they don't want to get it wrong. So they said there's area, maybe most public administrations would say they don't want to get it wrong, but if tax administration messes up, if it doesn't, do its GDPR properly, et cetera, if it misuses data in any way, and doesn't have the legacy system continuing on alongside, if you like, they would be in real trouble, and it would be unforgivable. So whilst there's this awareness of the benefits, there's a real concern about the risks of getting it wrong. So I would say that's the tension that they're working with.
And they were eager not to come across as being caught up in this wave that technology is driving their behavior. They're very much business-led in their technology adoption. They question, what does the administration need, and then seeing what potential match might there be with technologies that are coming on board, rather than just seeing a new technology and trying to grab it and adopt it before anyone else. So yeah, they're cautious.
Thank you. So 2 last questions then. So what about the taxpayer view? Would it be considered as well? And the second question, is there any emphasis on reducing the costs related to technology in taxation? And there was also a comment again about the technology replacing workers, and especially in the developing countries, whether this will get a resistance from the workforce.
So an immediate response to the comment on the workforce, I think that applies across lots of domains, unfortunately, this fear of what technology is doing in terms of displacement of work. But in relation to COVID, and I'd say regardless even of COVID, one thing I, as the tax person, wanted to push further, but we don't have the space within the project, is to really push on understanding the implications for compliance costs, both at the administration level and at the at the taxpayer side, right? So I actually think that's another project. Okay, we're cognizant of it, but it's certainly for later. And there's and equally, unfortunately, within a 2-year funded project, multidisciplinary, we're focusing for the moment on the tax administration side. Talking to taxpayers on this, another project, I'm afraid, but absolutely needs to be done. But I would say, if you take one of our tax administrations into account, they would say they would prefer us to talk to intermediaries about it rather than the citizens directly. But there you go.
And just on the workforce and the potential fear or reluctance from workers or employees of the tax administration with digitalization and automation, there's very much an awareness that there's a large cohort within the tax administration that's coming up to retirement age. So they're going to be losing a lot of their older workforce. And then there's this difficulty with competing with the tech giants to get the younger tax administration employees in that end. So this potential that can occur due to the adoption of digital technologies in reducing menial roles and enabling the professionalization of the employees is very much welcome.
Thank you very much again, Emer and Grace. It was an extremely interesting presentation and interesting discussion. And now we'll move on to the final talk for this morning's session. It's by Mohammed Abdullahi Umar. The talk is about multiple taxation in a typical developing countries. So, Mohammed, can I please ask you to upload your slides if you are going to show the slides?
Okay.
Yes, great, thank you.
Good afternoon, everyone. Welcome to my presentation. Each time I make presentation on developing countries, I'm always worried, especially if the audience are from the more advanced countries. I'm always worried, would they understand what I'm saying? The context is different, the issues are different. But then I hope I have some people who understand this context among the audience. The topic is multiple taxation in a typical underdeveloped country. And for this research, the particular country in focus is Nigeria. Okay, we start by highlighting the problem. We have heard a lot about international multiple or double taxation. That has attracted a lot of research and practitioner attention. Probably because the companies involved are large multinational companies. They try to avoid double taxation. They raise issues about multiple taxations across countries. Perhaps what we have not really focused attention on is within a country itself, not international double or multiple taxation. Businesses taxed multiple times or double within a country. And in this research, yes, we are able to find out, especially from the Nigerian context. The Nigerian government has always complained about inadequate tax revenue generation, low tax revenue generation. The country has one of the lowest tax to GDP ratio globally. It has always consistently been around 7%. This is a former minister of the country highlighting this problem. Okay, now in our title, we said we explored a paradox. And why do we think it is a paradox? Okay, on one side, you have government complaining of low tax revenue generation. They are not generating enough taxes. They have one of the lowest tax collection by GDP worldwide. But then on another side, we have business owners complaining that they face multiple taxation in the course of doing businesses in the country. And sometimes they have protested. They have embarked on protests to protest against multiple taxation. In some cases, they have gone to court. So now we think it's a paradox, because how can government be complaining of low taxes on one side, then businesses are complaining of too much or multiple taxes on one side? Somebody actually is not getting it right. So to us, it's a paradox, because we don't see how we can marry these two issues. Government saying no, taxpayers are not paying, they are not generating enough, then the business owners complaining of too much or too many taxes. Something is missing somewhere. Okay, I bring out some media, some issues from the media. Almost every week, we have issues coming up in the media to highlight this problem, to show how angry business owners are about tax. This is one of the country's national newspapers. You can see the headline: truck drivers sue AGF, IGP. AGF is the Accountant General, and they sue government over tax. Probably saying government is taxing.
Przez ciebie położą telefon na masło. No i bardzo tak dobrze. Gabryś, to się skończy tragicznie.
Then this is another newspaper. I want to make this problem very practical, and that is why I include these issues from the media. How multiple taxes cripple listed companies' operations. This is also from one of the country's national newspapers. These headlines they are always in the media every time. Businesses complaining of multiple taxes or too many taxes. This is from Reuters. This is an international and reputable media. You can see Nigeria telecom operators bemoan multiple taxes. I can see. Okay. This is also then again this is from the government perspective. Lagos is one of the biggest states in the country. The director of the state tax agency deny that government is collecting multiple taxes. So what can we learn from here? The government itself does not agree that it is collecting multiple taxes, but businesses are complaining and are going to court, complaining of multiple taxes. So like I said before, something definitely is wrong somewhere. And that is what we decided to investigate. Again, I would like to say our research is a qualitative one. We did not do any regression. We conducted interviews because we want to get the perspective of the business owners. When government say you are not paying enough tax, you are not complying, what do you, and you are saying you are paying multiple taxes, what do you mean? What do you mean by multiple taxes? What is your experience of multiple taxation? So that is the research question. That is the question we put across to our interview sample. Okay, the design, as I said before, is qualitative. We interviewed 18 business owners. It was a very detailed interview. We sat down with them. For some of them, I think we stayed for almost 2 hours discussing these issues. So it was a very big interview. Okay, we made findings after we extracted the interview and we did a transcript of all our interviews. We did data analysis. We were able to come up with 3 themes, our findings. Unfortunately, this presentation will not be a place for me to upload the transcript because it is very big. I do not think I will have the time to show details of the data. But what I have done is just to give our findings in the 3 themes. And our first finding is that, okay, this country is, the government is complaining of very low tax revenue generation. And from the perspective of the taxpayers, there are multiple taxes, and these multiple taxes could actually be causing low tax revenue generation to the government. How? We are going to understand in the next slide. Okay, what they said is these multiple taxes are usually collected illegally, and they are extortionist in nature. What actually is happening is that the government, apart from the revenue authority, the government have several agencies, ministries, departments, and others. So, and each of these agencies try to take one form or other, one form of money or the other from businesses. And these departments, ministries, there are many of them. So there is no stream. The revenue agency is not the only one that collects money from businesses. Okay, for example, an issue came up during this COVID problem. One local government wanted to charge businesses what they call COVID prevention taxes. And it became a national issue. There were outcries from businesses, and government at the top level had to intervene. Okay, so now what the taxpayers perceive as multiple taxes may not actually be tax. It may be what government agencies collect as perhaps user charges. Some are not even well defined. They are not in the law. They can come up with anything, any fee, anytime to collect. And now the problem is these monies don't go into a centralized government coffer. And at the end, when these taxes have been collected from businesses, these businesses are no longer ready or willing to declare their profits to the tax revenue authority because they feel they have been shortchanged by so many government agencies. So that's ultimately will lead to lower taxes, lower profits or lower taxes being declared to the revenue authority. So the problem here actually is a problem of quality of governance, because apparently the government has no control of its own agencies. They can charge fees and they can charge monies in whatever name, and they charge businesses, and these businesses are at their mercy because, of course, they have powers in quote to close down any business that does not pay this levy or taxes. So as we said in this thing, they are illegal, they are extortionists in the sense that they use force. They use force. The law enforcement agencies are also involved in this extortion. So if as a business you don't pay any of these levies or taxes in quotes, you incur the wrath of the law enforcement agency. So it's a kind of extortion racket. So that this is from the perspective of the business owners. As I said before, I've already mentioned this, they come in form of levies, taxes, and fees, and multiple government agencies. For example, during our interview, a business owner made us to understand that there's a government agency in charge of the environment. They pay money, they pay a kind of environmental levy to that government agency. This same business is into food. This same business also pay charges and levies to another government agency in charge of sanitation. There is also another government agency in charge of food and drugs. There are so many, and their activities and functions do overlap. So this is another theme that came up during the interview. So we have been able to divide the discussions into three themes. So what is our conclusion from the perspective of the business owner? Our conclusion is we feel we feel there's a paradox, because if government is complaining of low revenue and people are complaining of too many taxes, something is definitely wrong somewhere. And our conclusion is people are actually paying a lot of monies. People are paying a lot of monies that may not be going to the coffers of the tax revenue authority, because government apparently is not in control of the whole tax levy or charges, or what do you call it. Government is not fully in control of all the system. And one of our significant findings is whether government agencies call these monies levy or whatever they call it, the perception of the business owners is that they are being taxed by government. So they see no reason why, after being taxed, in quotes, by so many government agencies, they should still at the end declare profit to the tax authority. The tax authority and other government agencies all belong to government, and in their own perception, it is one government. So our research is important to the government of Nigeria and to other developing countries because of their peculiar governance issues. It is possible if they stop illegal multiple taxation and ensure that businesses only pay appropriate, suitable, and streamlined taxes to the revenue authority. It is possible there will be a significant improvement in tax revenue generation, because what we have now is leakages, so many leakages, revenue flying to different government agencies that are not being centrally accounted for. And that is affecting tax revenue generation. So we believe the low tax to GDP ratio that government has always complained about may not entirely be as a result of non-compliance. It may also be as a result of multiple taxation from the discussions we have had in this paper. So I would like to end the presentation here. Thank you very much for listening.
Thank you, Mohammed. That's perfect timing. So we have a couple of questions from the audience. First one is from Christina Gung-Prasechu. Those extra taxes that are collected illegally, are they collected by government officers or by third parties?
Government officers, as I said before, and even using government's own security agencies to enforce these collections.
Thank you. And the second question is, would taxpayer education as a strategy assist to deal with the challenge?
Yes, I agree. I agree. Taxpayers' education, maybe educate taxpayers on the taxes they are supposed to pay and the taxes they are not supposed to pay. But then again, there is need for political will. Government itself has questions to answer, because these agencies are also under the control of government. So education alone might not, there is need to educate taxpayers, but then there is need to educate government that something is wrong somewhere. So the education should be both ways, I think.
And there is a comment from Lotta. Thank you very much. A comment, you give an important message, which is, in my view, also important for developed countries. In a very tax compliant Sweden, what is taxes in some instances called something else. Policymakers are very ingenious with their words, and citizens do not perceive all taxes we pay. Therefore, we are more compliant and accept the actually very high total tax rate.
Yes, I think there may be some issues in more developed countries, actually. Just that it's always worst. The issues are very bad when it is underdeveloped countries.
Yeah, I think this is an excellent comment, and there is certainly the role of narrative on how do you call what you collect from a business or an individual. Is it a tax? Is it a contribution? Like in the UK, we have personal income tax and we have social national security contributions. So this is again a tax, but it is called contribution. So many people just do not perceive it as a tax. And there is also a question from Christus. Thank you, Umar. Very interesting presentation. In your conclusion, you mentioned there is a need for a streamlined and appropriate tax. What do you mean, and can you elaborate on that?
What I mean streamline is as it is from the narration of the business owners, the taxes are just flying everywhere. I pay this one today, next week I pay another one. I pay to this government agency. Next week, another government agency is coming. In the third week, another government agency is coming. There's no rule. It's just like a jungle of I can charge you any amount. So what I mean by streamline is the taxpayers. One of the canons of taxation is predictability, right? The taxpayer should be able to predict. If I make so much profit, this is my tax. This is my tax liability. But in a situation where any government agency can come up with any levy, any tax, anytime. That is what I mean by streamline. There should be one central tax authority, and the business owners should pay revenue into that coffers. Perhaps that will improve revenue generation. But as it is now, the monies are disappearing into different routes. That is what I mean by streamline.
Yes, and about appropriate, do you mean property, income, sales tax? Do you mean the type of tax? What do you mean by the appropriate tax system?
Property and others. In our study, we actually we sampled business owners, not property taxes. So I would say business taxes, not business income taxes, not property. And our sample does not include salary earners, it's business owners.
Right. So in that context, if it is a tax on business owners,
yes.
What then would be an appropriate tax?
Yeah, appropriate tax would be taxes on their profits, as we have everywhere, taxes on their profit. And even if there are levies and charges that they are supposed to pay, it should be well known, so that if they know also, they will not complain because they are aware. But in a situation where any government agency can levy any amount and also use law enforcement agents to enforce the collection, because obviously the law enforcement agents are complicit because they also get a share of the extortion rackets. Extortion rackets, if I may use that word. So by streamlining, I mean business owners should know what is legal taxes that they are supposed. They should know their legal tax liability. So who are they paying to? This should be something that should be open.
Yes. Thank you very much.